In today's show, Bitcoin set for a $288,000 bull run in 2020. That's right, this year, according to popular Bitcoin price model called the Stock the Flow by PlanB. The latest update of the Bitcoin Stock the Flow X price model shows July is beginning exactly as required for a long-term bullish trajectory to continue. Taking a look at PlanB's tweet, we can see it published right here. The second red dot, and if you're not familiar with the Stock the Flow model, dots immediately after the halving, like at present, are in red and historically precede a jump in Bitcoin's price, which PlanB often refers to as being higher by an order of magnitude. Reflected in the model, the next order of magnitude shift is imminent. It should start before the end of this year, 2020. Between then and the next halving in 2024, the model focuses on a price of $288,000 per Bitcoin, with the potential for much higher peaks. I'm going to be breaking this down for you here in today's show. Also, in today's episode, Bitcoin's 90-day active supply soars to pre-2017 bull run level, according to this latest report, which I'm going to be breaking down for you here in today's show, entitled Strong End to Quarter 2 as Bitcoin Approaches Critical Levels. And in the report, it goes on to share, secondly, prior to the 2017 and 2019 bull run, where Bitcoin hit 20,000 and 14,000 highs against the dollar, there was evidence of steep surges in the 90-day percent active supply depicted by the green zones, which I'll break down for you in today's show. And they also go on to conclude, as statistics have shown, a potential run-up in Bitcoin prices can be expected, which has yet to materialize, leading us to believe that the preceding rise in Bitcoin prices could happen sooner rather than later. We'll be discussing this here in today's show. Also, in today's episode, we'll be taking a look at the overall crypto market. As we can see, Bitcoin back in the red, struggling to maintain that $9,000 support. A lot of the altcoins also currently in the red. Where's the Bitcoin price likely to go from here? Find out all this, plus so much more, in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. So be sure to smash that subscribe button and turn on all notifications to receive daily premium crypto news alerts. And before we kick off today's show, if interested in learning from the Wall Street legend himself, Teeka Tiwari, who picked Apple back in 2003 and Bitcoin in 2016 as he shares his #1 pick for the 2020s, they're calling it the investment of the decade. Right now, there is a mad rush in corporate America. It involves Amazon, Google, Microsoft, and Facebook. They're all betting on a new technology that the World Economic Forum projects will soar 295,000% over 7 years, but it's not AI, the Internet of Things, or 5G. To discover what it is, click the link below this video in the description to watch this exclusive presentation by the one and only Teeka Tiwari. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV, and let's kick it off by diving into today's top story of the day. Bitcoin set for a $288,000 bull run in 2020. Popular Bitcoin price model suggests, that's right, Bitcoin may be struggling to hit 10,000 once again, but its progress is right on track, according to the new Stock the Flow data. Adding a new update to his model on July 1st, Stock the Flow model creator PlanB showed that Bitcoin is behaving exactly as its bullish history demands. Taking a look at the tweet here, you can see the Bitcoin Stock the Flow cross asset model, also known as Stock the Flow X, has just published the second red dot. And if you look in history, history tends to rhyme, if not repeat. And we can see when we have a red dot, it's typically followed by a bullish run in the Bitcoin market. And taking a look at some of the replies to this tweet, this dude right here, Tanuki, wrote, "I think the two marked dots are in the wrong spot. Should be further down after the halving, in my honest opinion." And PlanB of the Stock the Flow model responded, "For Stock the Flow, yes, because Stock the Flow jumps to a new level immediately after the halving. For Stock the Flow X, no, because a new phase does not start exactly after the halvings, but when both Stock the Flow and price have moved. I guessed phase 5 will start in quarter 4, but we will know for sure with hindsight." And we will eventually find out, right? The Bitcoin stock-to-flow cross-asset model, or stock-to-flow X, used color-coded dots to analyze the Bitcoin price action relative to the date of its next block reward halving. Dots immediately after halving, like at present, are in red and historically precede a jump in the Bitcoin price, which PlanB often refers to as being higher by an order of magnitude. Reflected in the model, the next order of magnitude shift is imminent. It should start before the end of this year, 2020. Between then and the next halving in 2024, the model focuses on a higher price of $288,000 per Bitcoin, with the potential for much higher peaks. That's right. Bitcoin stock-to-flow chart update, red dot number 2. PlanB summarized on Twitter, referring to June and July's markings on the chart. Stock-to-flow remains a steadfast bullish take on the long-term Bitcoin price action, despite fielding considerable criticism this year. I'd love to know your thoughts personally on the stock-to-flow model as well as stock-to-flow X. I know PlanB in the stock-to-flow model has been accurate for the longest time, and I am a firm believer in this model. I feel it has been accurate and it will continue to be accurate. I know there's a lot of analysts out there who are not feeling the stock-to-flow model, including Ethereum's Vitalik Buterin, who does talk down upon it. Interestingly enough, PlanB maintains that those critics have yet to produce a viable alternative to his model, which has traditionally tracked the price behavior extremely accurately. So there's the key word there, extremely accurately. So if you have a better price model, please do share it with me and let me know. We'll talk about it. So a typical month can spark a $12,000 Bitcoin price. That's right. Analyzing monthly returns during the last halving period from 2016 to 2020, PlanB highlighted the very asymmetrical nature of Bitcoin price performance. As such, for Bitcoin to leave its current stagnant levels at around 9,000 and hit 12K, all that is needed is a typical month of solid 30% gains, which we've seen time and time again, especially here in the crypto market. Nonetheless, Bitcoin's considerable correlation to the S&P 500 forms a focus for macro factors dictating likely resistance to even 10,000. I know 10,000 has been a critical psychological resistance for the Bitcoin price, and I know we've been trying to break past 10,500 so we can continue inching towards that $12,000 or even $14,000 set high of last year. Now, against the backdrop of pressure on the stock markets, analysts broadly expect that Bitcoin will continue to act in line with macro swings, no matter how intense these become. Tone Vase, for example, shout out to Tone, has stated he does not believe that the pair will go above $10,000 until 2021. So let me know your thoughts surrounding these bullish price predictions from the stock-to-flow model and stock-to-flow X. Do you feel it has been accurate? Do you believe it will be accurate and that we can expect to see a $288,000 Bitcoin price anytime soon within the next 4 years? Holla at your boy and let me know in the comments right down below. And before we get to our next story of the day, entitled Bitcoin 90-Day Active Supply Soars to Pre-2017 Bull Run Level, according to this exclusive crypto report, let's first take a look at the overall crypto market. We can see Bitcoin struggling to maintain that $9,000 support. I would not be surprised if we break back down into the $8,000 the way things are currently looking. And in order to rise back to where we left off before consolidating back down to where we're currently at, we really need to break that critical $10,500 resistance. Until then, I don't know where the Bitcoin price is likely to head. More than likely continue to range, as the market has been extremely boring to say the least. Ethereum down 0.5% for the day, trading at $226. Chainlink, one of the few top alts actually in the green, up 2.37%, trading at $4.86. I'd love to see Chainlink smash $5. That would be so epic. XRP also up 0.8% for the day, trading at 17.7 cents. Miss Litecoin down 0.18%, trading at $41. And then we have ADA, which was surging approximately 10% yesterday, is also surging today, but not by that much, 1.5%, trading at 9.4 cents. Out of this list of altcoins, which alts are you most bullish on for 2020? Let me know your thoughts in the comments right down below. All right, now for our next story of the day. An on-chain metric, which has been declining since 2017, is now signaling a bullish trend. A new report analyzing on-chain activity says that Bitcoin is now due for a bullish phase based on supply movements, published by asset manager Stack Funds on July 2nd. The findings suggest that 90-day active supply is dictating bullish potential for Bitcoin. And let's actually take a look at this report. I'm going to actually scroll through it and then give you the highlights, and we're going to talk about it. And I'll also include this resource resource in the show notes below the video, in the description, so you can reference it and check it out for yourself. All right, now for the highlights. Bitcoin price to rise sooner rather than later. Let's talk about it. Publishing an accompanying chart for the metric, Stack argued that it has important implications for historical price behavior. Here's a quote from the report. The data provides an indication of two folds. Firstly, the 90-day percentage of Bitcoin active supply has tapered over the past 3 years from 36% to 17%, suggesting that investors' time horizon has lengthened as Bitcoins are held over long periods in their wallet, the report states. Secondly, prior to the 2017 and 2019 bull run, where Bitcoin hit all-time highs of 20K and 14,000 highs against the dollar, there was evidence of steep surges in the 90-day percentage active supply depicted in the green zones. The trend has appeared since Bitcoin's price crash in March, an event which proved to be something of a watershed moment for traders. Now, in my opinion, Bitcoin would already be hovering above $14,000 if we didn't have a pandemic occur earlier in March of this year. Stack concluded, as statistics have shown, a potential run-up in Bitcoin prices can be expected. Let me repeat, as statistics have shown, a potential run-up in Bitcoin prices can be expected, which has yet to materialize, leading us to believe that the preceding rise in Bitcoin prices could happen sooner rather than later. And they went ahead to include this graph, which shows the percentage of active 90-day Bitcoin supply, which we can see has been on the rise. Now, the Bitcoin price should be closer to 12K, right? Stack comes hot on the heels of a highly bullish report from Bloomberg, which I covered previously here in the show, which last month eyed performance exceeding $12,000. Now, current ranging price behavior around 9K is a compression for Bloomberg, and a reaction should come into a form of gains in the short term. Volatility should continue declining as Bitcoin extends its transition to the crypto equivalent of gold from a highly speculative asset, yet we expect recent compression to be resolved via higher prices, analysts summarize. While many indicators are encouraging, it is the demand which is clearly bullish. I repeat, it is the demand which is clearly bullish. Let's not forget, we have companies like the Bitcoin Grayscale Trust currently purchasing 3 times the amount of Bitcoin which is currently being mined. We have investors such as Paul Tudor Jones, considered the most influential of our times, allocating 1 to 3% of his overall investment portfolio into Bitcoin. We're talking about hundreds of millions of dollars. So this report continues, is almost the most important category to win over for Bitcoin. As such, Bloomberg joins various others, including Cointelegraph Markets analyst Michael Van de Poppe, in forecasting a potential price target of $12,000. Increasing addresses used on exchange investment product inflows and future open interest create firmer underpinnings for the benchmark crypto. It states the number of active Bitcoin addresses used, a key signal of the 2018 price decline and 2019 recovery, suggests a value closer to $12,000 per Bitcoin based on historical patterns. I'm also going to concur. I feel the real value of Bitcoin right now is closer to 14,000, even though we're trading just above 9,000. Also, we have the Bollinger Bands, which foresee volatility beyond that level. The bullish potential by no means fades. In a technical prognosis, Bloomberg describes Bitcoin as a caged bull. Reminds me of the Raging Bull with Joe Pesci and Robert De Niro, which can hit even higher levels. About 8,000 to 10,000 is the primary consolidation range, it explains. We see Bitcoin at about 9,200 on June 25th as more likely to head towards the 2019 high close of just below 13,000, then sustaining under $8,000. A classic indicator, Bollinger Bands, points to a breakout soon. Historically accurate at charting volatility in either direction, the bands have shown characteristics narrowing in recent weeks, a key precursor to bigger price movements, as we can see right here in this graph. And last month, the creator, John Bollinger himself, weighed in on Bitcoin, cautioning against optimism over a spurt above $10,000. When do you think we will cross 10,000 once again and retest 10.5 and move on up to 12,000, 13, and even $14,000? Let me know in the comments right down below. Now let's check out some of the volume on the top exchanges. Binance is up almost 25% for the day with 4.3 billion in volume, and above Hobby Global, which is up 41% with 3.9 billion in volume. Hobby Global and Binance have been duking it out over the past few weeks, to say the least, trying to take over that number one spot, and Binance is reigning supreme at the current moment. But tomorrow things could change. OKEX down 2.2% with 1.9 billion. in volume, and BitMEX down about 5% with $1.5 billion in volume. Now taking a look at the overall crypto market cap, we're sitting at $259 billion with $54 billion in volume in the past 24 hours, and the current BTC dominance has been on the decline. Yesterday it was 64.7, today it's 64.5, at least according to CoinMarketCap. And taking a look at the top gainers within the top 100, Kyber Network up 19%, trading at $1.75. VeChain up 6.8%. I know many of you are very bullish on VeChain, trading at 0.009. Then we have Icon up 4%, trading at 32.5 cents. Bancor, we talked about this yesterday. It has been one of the most bullish alts, outperforming Bitcoin in the recent months, up 3.88%, trading at $1.34. 0x, I'm definitely bullish on Ox, up 2.7%, trading at 36 cents, and Nulls up 1.9%, trading at 54.5 cents. So as you can see, there's some small gainers, but the majority of the market is currently in the red. So now let's talk about the biggest losers within the top 100 in the past 24 hours. Nexo down 19%, trading at 18 cents. Quant down 10%, trading at $7.63. The Midas Touch Gold down 10%, trading at 4.4 cents. Aave down 8%, trading just below 14 cents. Flexicoin down 7%, trading at 0.002, and Siacoin down 7%, trading at 0.002. Now, out of this list of alts, which altcoins, once again, are you most bullish on? Let me know your thoughts in the comments right down below. And now checking out the BitMEX margins, we can see the bears are back in control, leading with about 74 million in superiority in the last 24 hours, with shorts leading 52.7% versus 47.3% longs. Are you currently bullish or bearish on the king of all cryptos? Let me know in the comments right down below. And I want to encourage you to check out the description right below this video by clicking show more in the description right down below for a detailed analysis of what's going on in the market. This goes for all 465 plus videos right here on my channel. Also have some very helpful resources for you to plug into, including the blog to my podcast, which could be found at cryptonewsyes.com. Not only could you download the latest episode of the show every single day, you can do so in MP3 format so you can listen to it in the car, on your way to work, when you're working out, or just out and about and doing your thing. Also, be sure to subscribe on YouTube if you haven't yet already done so. The direct link is cryptonewsalerts.net, or just smash that subscribe button right below this video. Also, I appreciate your continued support on all the major podcasting platforms, including Apple's iTunes, Spotify, Google Play, Stitcher Radio. You can also follow us on Twitter to receive daily crypto news alerts. My Twitter handle is Crypto News Yes. And for those of you active on Facebook, as I am, I do have a crypto Facebook group entitled Crypto Alchemy with over 17,000 cryptopreneurs from all over the world. To become a part of this, simply click this link, request to join. I'll be sure to plug you in. And for those of you active on Telegram, as I am, I do have a crypto Telegram chat, which you can join by simply clicking this link. You'll automatically be added, and I'm looking forward to connecting with you personally on the inside. And now let's take a look at the Crypto Greed and Fear Index. Shows we're currently rated a 41 in fear. Yesterday was a 42, last week a 40, and last month we were neutral with a 48. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign that investors are too worried. That can be a buying opportunity. And when investors are getting too greedy, that means the market is due for a correction. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto revolution. If you gain value out of today's show, be sure to smash that subscribe button and turn on all notifications to receive daily premium crypto news alerts. And in the meantime, the blue pill or the red pill, it's your choice, my friend. If you choose the blue pill, you will wake up in Wonderland, right? And forget everything you think you know about cryptocurrency. Choose the red pill, you will see the truth and how deep this rabbit hole for cryptocurrency truly goes. The choice is yours, my friend. And real quick, before I go, if interested in learning from the Wall Street legend himself, Tika Twari, who picked Apple back in 2003 and Bitcoin in 2016, as he shares his #1 pick for the 2020s, they're calling it the investment of the decade. Right now, there is a mad rush in corporate America. It involves Amazon, Google, Microsoft, and Facebook. They're all betting on a new technology that the World Economic Forum projects will soar 295,000% over 7 years. But it's not AI. The Internet of Things or 5G. To discover what it is, smash the link below this video in the description. It's going to take you here to this page to watch this exclusive presentation by the one and only Tikatwari. Enjoy it, and I look forward to catching you on tomorrow's episode. Peace.